In today's video, I'm going to be going over a couple of things. We're going to kick it a little old school style here. We're going to show you a format for single family homes, St. Lucie, Martin, and Palm Beach County. Kind of how I used to do it. Want to see how the audience likes this. And I'm also in the beginning going to go over the interest rates. We get a lot of questions from folks of where are the interest rates now? And then I'm going to slip in also what the national home inventory is on the market and what the changes are. So let's dive in. Now, this is from Wells Fargo, and this is interest rates in the United States for home purchases, property purchases. Now, you can see from this graph, we've gone down since April almost a full point of interest. So you can see over in here, the 18th of April-ish, you were right around like 7.25% or so. And if we come all the way over here down to August August 22nd of this year, it's right around 6.5 or so. Now, this fluctuates, but what you can see is this downward trend in interest rates. So it looks like interest rates are continuing to drop. Now, what does this mean for buyers and sellers? What it means for buyers is a point of interest, which we're getting pretty close to 1% or 1 point of interest, can be a significant difference in your monthly payment down. So as the interest rate goes down, your cost of purchasing a home goes down because you're paying less interest over that 30-year period. Now, again, this is the 30-year mortgage by Freddie Mac, okay? So I wanted you all to see that out there. Now, what does it mean for sellers? What does this mean is that since buyers are going to have more purchasing power, then, that is going to, in effect, potentially either shore up your valuation of your property price per square foot or have that start to go up. So think about it inverse, meaning as this goes down, prices should start to go up and or level off from some of the condos, villas, and townhomes, which I've shown in other videos of prices dropping. So I thought that this was a very pertinent thing. We get a lot of questions about interest rates, and you can see they are dropping. Now let's go to the next graph of the home inventory for the United States. I wanted to show this. What this shows here is this is the home inventory or properties on the market as of July of 2024. Now we're here in August, so it's going to be a little different, but you can see the ascension. We had a little bit of a drop at the beginning of this year of inventory, but the inventory is kind of going back up. And this 19.8% is year over year national inventory going up. So it went up by really almost 200,000 units at least, right? So, housing inventory going up. Now, with the interest rates coming down, I would anticipate that the inventory is going to start to drop. We'll see if my inclination to this is true or not, because sometimes what we think is going to happen doesn't always happen. But again, the inverse relationship as interest rates go down, that should not be an inverse relationship. Actually, inventory should go down because people have more purchasing power. We're coming out of third quarter. We're getting closer to the election. I don't want to get into that too much, but interest rates should drop because, look, in September, there's a very high chance, the CME group, which actually does kind of a betting, if you will, for the traders out there on what interest rates will do. There's people that just trade interest rates. Now, they also kind of look into the future for that. And the CME group anticipates that there's almost 100% chance that it'll drop by 0.25, and there's like a 78% chance that it'll drop by a half a point. If that's the case, then you're going to see these interest rates continue on the 30-year Freddie Mac. You're going to see those continue to drop, and that might set off more purchasing, which would reduce that inventory and shore up prices. Now let's dive into the actual numbers and the actual charts themselves. So if we look at this, now we're starting off with Saint Lucie County, going down to Martin County, and going to Palm Beach County. If you look over here, this is year over year, only single family homes. Now, This is year over year, and this is month. So the month of July of 2023 was at 504 units, single family units sold. If we come over to July of 2024, a year later, it went up to 525 units. So that's up 4.2% in actual units closed, which is great. For the sellers out there, this is great. It also shows the buyers that maybe we have turned the corner in this really kind of high interest rate market that has really kind of suppressed purchasing and prices. Now, paid in cash, this is another interesting one, which doesn't have as much to do with interest rates, obviously, because this is cash. But what it tells us is the cash is kind of coming back. We lost cash purchases last year. And this year, going from 2023, it was at 104 units. It went up to 126 units, and that's up 21% in those cash closed deals. Now, the median sale price, which is the absolute middle, it's not the average of everything. It's, the lowest, the highest, and what is the middle? It's not all of those put together divided by that, getting us an average. It's what is that absolute middle? Think of the median as the middle. It went from 390,000 up to 393,000, so they're up in Port St. Lucie 1%. Now, this is usually they aren't this close. The average sale price went from 417,000 to 418,183, so that's up 0.2. So does that mean that if you have a single family home in Port St. Lucie, you only went up by 0.2%? No. It depends on, of course, the area. We've gone over this in other videos before. It depends on the area, the age of the home, all that kind of stuff. But we do have an appreciation of 0.2 just from the average. Now, we come down to the dollar volume. What does that mean? That is all of the units put together, that total volume of all those put together for the month of July of 2023, and that was 210.3 million. And in 2024, a year later, it went up to 219 million. That's up 4.4%. Now, the other things here of the median percentage of original listing price to sale price, don't want to dig into that too much, but basically people are getting, on average, 2% lower than what the list price was to actual sale. Median time to contract, it went from 25 days to 43 days to contract. So that means it's sitting on the market now on average 43 days, and that's up 72%. So properties have stayed on the market a lot longer year over year in Port St. Lucie. And the median time to sale to actually close went from 76 to 83. And now that is up 9.2%. So it's taking longer for them to actually sell. Not as long as they stay on the market, but it takes a little bit longer for them to sell. New pending sales, that's up 2.2%. So you've got that's good, that's healthy. New listings is only up by 1.8%. So you don't have a lot of inventory coming on the market year over year compared. And the pending inventory has actually gone down. So it's gone from 878 to 769, and that's down 12.4%. So you're just not seeing as many properties go under agreement, and that's what's keeping that inventory a little bit higher, as we'll get down to the month supply of inventory. Now, the inventory of active listings, this went up significantly. It went from 1,219 all the way up to 2,067. That's up 69%. A lot more properties are actually on the market. Almost 70% more properties on the market. Now, if we go to month supply of inventory, again, under 3 months is a seller's market, between 3 and 6 is neutral, and over 6 months of inventory is a buyer's market. So we were in a full seller's market in July of 2023 at 2.5 under that 3, and then we went to 4.5, so that's right in the middle of that neutral market, but we are up 80% in months supply of inventory. Now, let's move down to Martin County. Martin County had us at closed sales went from 170 to 177, so it's up 4.1% in closed sales, so that's good. We went from 79 to 67, a little bit different from St. Lucie County. Obviously, there's less than there was this year previous to the other year, whereas in St. Lucie, it actually cash deals went up. Now, the median sale price, that was that middle, that went from 610 down to 570,000 in that middle, down 6.6. Doesn't mean that you lost 6.6 of the value of your home. Again, you have to be looking at the exact area, type of home, and so forth. Now, the average sale price, now, what this is dramatic if you look at this, and I wouldn't want you to freak out at all going, oh my God, I lost 31%. It's just that there's not as many of those super high-end properties selling, so there's more of the lower price points that are selling, and that's why it went from 1,168 down to 806. So that's down 31% in the average sale price. So again, that's not a value thing. Dollar volume went from 198.7 million in 23 all the way up to 142, or down rather, 142.8 million. That's down 28%. Getting on average 2.6 less on the original listing price to sale price. And then the median time to contract, similar to St. Lucie County, it's taking longer for them to stay on the market, going from 22 days to 33 days. And then median time to sale went from 65 to 75. That's up 15% on the time where it goes under agreement to its selling. They're just taking a little bit longer to go under agreement, and they're taking a little bit longer to sell. Now, pending sales is actually up, so that's good. It's up 2.5% year over year. New listings is down, so there's not as much inventory in Martin County coming on the market. We're down 3%. Pending inventory is down only by 0.9, so just, kind of treading water there. And then the inventory of active listings went from 473 up to 704. So you got a lot more that's on the market, almost 50% at 48.8%. Now, that month's supply of inventory, we were in a seller's market officially. Single-family homes, Martin County at 2.9 in 2023. We went up to 4.3, so that's now in that neutral market, and we're up 48.3% in the month's supply of inventory. So we're still in a neutral market there, but it has trended up over 2 months. Now, coming lastly to Palm Beach County, much larger county, remember, and we went from closed sales to 1,164. We went to 1,174. It's actually up 0.9%. So there's more closed sales in Palm Beach County by almost 1% since year over year. Paid in cash went from 499 to 480. So that's down 3.8. So of the three counties, St. Lucie County had more cash sales in year over year, and it had in Martin and Palm Beach County less paid in cash, so down 3.8%. Median sale price went from 600 to 644,500, so that's up 7.4%. So that's good. And similar, actually not similar to Martin County, it went from $1 million, the average sale price $1,081,000 to $1,099,000. So it's up about 1.7% for the average. Now, dollar volume pretty much stayed the same, 1.3 billion, much larger county year over year, but pretty much the same. So Palm Beach County kind of nice staying level there, getting about 2.1% less off of the original list price to the eventual sale price. And then median time to contract, that's up similar to the other two counties, 22 days to get to contract in 23. It was 35 days. So it's up 59%. But again, even at 35 days on the market, the national average is above 70. So properties are not staying on the market. It's about half as long as the national average. Now, median time to sale, again, it's just taking a little bit longer once they go under agreement, to actually selling. So that's 21.2% up in the eventual time that it takes to sell. Pending sales are actually down 9.7, so just not as much going under agreement. And new listings is actually up, so you got more inventory still coming on the market at 1,423 to that 1,611. We're up 13%. Pending inventory is down again, 1,900 to 1,641. You're down 13%. And the inventory of active listings has gone up significantly by 50%, 3,430 as of July of 23, and July of 24 it went up to 5,159. So you got a lot more active inventory, and then that spills into the month supply of inventory going from 2.9 to 4.5, and you're up 55%. What does this all mean? I think you can see that the interest rates are dropping, and yet the inventory has kind of leveled off for the national average, but you get about 200,000 more homes on the market as of July of 24 here. So, and I think you can see from the different counties, they're all kind of holding their own, but you are seeing inventory up, you're seeing longer days on the market, you're seeing longer days to actually close, and on average, average sale price is down, median sale price is a little bit down, but I still think this is a pretty healthy market. This is the single family home. Remember, this is not the condo, villa, townhome market that I've done in other videos. So I'd like to hear the audience's response to this. What do you think about the format? Do you like the graphs better? Do you like the kind of cells and the spreadsheet look here? I'd like to hear from the audience how you're receiving this. And feel free to reach out anytime if you got a question about your home, value, inventory, any of that kind of stuff. We'd love to answer your questions. So hope this finds you well, and we'll see you on the next video.